So thanks for joining us for our second mini mastermind around disability and individual income replacement, as we like to call it these days, versus disability. I'm Kelly Haynes from CAFL, and we're going to kind of talk through a few different things. Today, we're going to go over individual income replacement versus group and income replacement basic coverages. So what are the coverages that are standard? What do those look like? What riders are available? How do they work? So we're going to walk through that today. So individual versus group, is work coverage enough? We have people that say, I have disability coverage through work. We start that conversation. We get up the nerve. We listen to what Vinny and Christy said last week, and we ask a couple of questions. They're like, oh, I've already have it. I already paid for it. My employer pays for it. I don't need duplicate coverage. Like, why would I ever need it? What does that look like? Those are just a few of the things that we come across and some of the things that might be said. But the big differences here is the DI gap. So typical group plans cover maybe 60% of your base salary. A lot of times they also have a cap, which is really important to keep in mind. So if you're one of the high income earners in that corporation, they might have a $4,000 or $5,000 cap of what you're eligible for in their group DI plan. So when people call and they say, listen, we want to get over and above what they have in their group coverage, there are times that we're going to ask you here at CAFL, can you get your hands on that coverage? Can you show us what's current so that we can go ahead and look and see what their plan actually says? Because we want to make sure that we're covering it appropriately. So let's say here's a scenario that this person has a $100,000 salary with a $50,000 bonus. Let's say that their net group long-term disability is $45,000. Look at how big of a gap that is at that 60%. Look at how huge of a gap that they have that's unpaid income should they become disabled. So how do we fill that? What can we utilize to do that? That's where your individual long-term or individual disability plans come in. So some questions you might ask in that instance: can you live on half of a paycheck? We talked last week about the statistic right now is, I think, in the mid-80s of families in the United States that live paycheck to paycheck. So not only could you live without a paycheck, but could you live without 5 or 10 or 20 paychecks, but could you live off of half? Because that's kind of what you're setting yourself up for, especially if you're a high income earner with that group long-term disability care. And you also have to remember, they might not even be looking at bonuses. They might be just looking and having coverage for your base salary. So the nice thing about having an individual disability policy is that they take into account what you make even on bonuses. So where are a lot of the gaps? It's not 100%. It may not cover that bonus pay. So those are just a couple of things we went over. That max monthly benefit. So again, it might cap it. You might only have $2,000 in group long-term disability. Until we review the policy, you just don't even know what you have. You can typically you can never take it with you if you decide to leave your position at your job. So then you're starting over with a new policy that looks completely different again. And then they commonly have a different definition of disability. So what does that definition actually say? How is it worded about when you can go on claim and how they pay? One word in that entire description can change the entire way the policy works. And then if the employer pays a premium, the benefits are taxable. So you might be getting 60% of your pay. You're not getting any of your bonuses covered. You can't take it with you when you go. And because your employer pays for it, now it's taxable income. So a few things to keep in mind that you might not be aware of when you have someone coming in and saying, oh, I have coverage through work, I should be set. So we're going to step into coverage basics. So what does an actual individual disability policy, it was really hard to say for some reason. What does that actually do? What are the pieces of it? What makes the premium? What can be adjusted to change the premium? Let's take a look at some of that. And I got to keep moving you guys so I can see my own screen here. Sorry. So policy basics is a definition of disability, we discussed that just a second ago. When do you become eligible for coverage? What does a disability truly mean in that policy, and how does it work? Your elimination period is your waiting period. It's a number of days before you typically receive your first monthly payment. The benefit period is how long the policy will pay, and the benefit payment is a monthly amount the policy will pay. So all of those things affect the premium. So when we are on the phone, when we're looking at a policy and we ask you all of these questions, it's good to know that we might tweak one or two of them to give you some different options to present to the client that might make a difference in whether or not it falls in the affordability range for them with their individual disability. A couple other things, obviously, that are going to affect premium is what is their occupation. So we talked a lot last week about occupation. We had the two carriers, we had Mass Mutual and Assurity on the line last week, and they did a really nice job. If you weren't able to hop on, definitely go back and watch the video. It's on Capital's YouTube channel. But they went back and forth. We have Assurity who offers some occupations that Mass Mutual just isn't competitive with. And the same goes for Mass Mutual versus Assurity, right? But Assurity also offers a graded benefit. So for those that might have a health risk or a health issue or a pre-existing condition, a lot of times they can get them coverage where another carrier wouldn't. So occupation is one thing that definitely affects the premium, as does health. And we're going to look now at the definition of disability of own OC versus any OC. So I know these seem really like similar words, of own occupation versus any occupation, but we're going to step through it so you can see the differences. Please know this is a completely interactive discussion. Feel free to chime in with questions at any time if I'm going too fast or if something doesn't make sense. So own occupation is going to be a higher premium. It is a preferable option. It means if you become disabled and cannot perform your current job, so whatever your current role is, you're eligible for benefits. They even have specific own OC for surgeons or specialty doctors that are very, very common because they might be brain surgeons, but let's say they have a disability that doesn't allow them to do their brain surgery anymore, but they can become a family practice. They're still in a doctor role, but it's a completely different specialty. So Mass Mutual is one that really, really hones in on that specialty field. Just something to keep in mind when you're requesting quotes, why we might send you one carrier over another. And any occupation is if you become disabled and can't work, you're eligible for benefits. So what if you become disabled, but you can work, just not in your current job? So let's say I was that brain surgeon, I can't even be a family doctor anymore, but I can teach. The income between the two fields is so vast that where is that gap being filled by any policy? So there's a big difference in that, in those two terms. Is there any questions on own OC versus any OC? Okay, moving along. You'll see terms like non-cancelable versus renewable. So non-cancelable is a preferred option, again, has a higher premium carried with it. It means as long as the premiums are paid, the carrier cannot cancel the policy or increase the premiums. So as we age, things obviously get more expensive in the insurance world. So non-cancelable makes it so that those rates are locked in as long as your premiums are paid. Renewable means the carrier can increase the premium and can ask for reapplication. So if for some reason, let's say that they look up records, they see something's different, they can ask for reapplication at any point in time. So it's important to keep that in mind when you're looking at the two differences, or we quote you one versus the other so that you know what they are. A few other terms that are pretty standard is the residual, presumptive, and catastrophic coverage. So residual is where a carrier will pay a percentage of the benefit if the client's still able to work, but just not in the same capacity as before. So I can go back to my job. Let's say I have coverage, I work in a warehouse. I can go back to my job, but let's say I can't lift boxes now. So I'm now in a desk job. My income is different because that gets paid a different level of salary, things like that. How do we offset that? So the residual allows you to get up to 20% of your benefit if you're still able to work and it's just not in the same capacity as you were before. Presumptive, we don't ever want anyone to ever have to use this. This is a lump sum if you lose sight in both eyes, hearing in both ears, speech, the use of both hands, both feet, or one hand, one foot. And catastrophic is where you can't complete 2 of the 6 daily ADLs, or you get some kind of cognitive impairment. So there are a few things that affect the benefit amount that is paid, and they are all a little bit different. So benefit update is scheduled review to ensure the monthly benefits are keeping up with income changes and increase. A lot of times you'll see something similar to a benefit update on policies where the insured is a resident or is a fellow moving into the residency, where they get steady increases in their income. We want to make sure that their policy automatically keeps up with that increase. Future increase is an automatic increase of benefit to keep up with inflation. And then COLA is a little bit different than future increase. That is while disabled and receiving benefit, your payment, so your monthly benefit, is adjusted to keep up with inflation. So it's a little bit different than the future increase. And then a few other things that you might see in disability individual policies are things like graded benefit. This is what we went into a little bit with Christy from Assurity last week. So those are things that are for riskier occupations and impaired risk due to health. They might be offered coverage as a graded benefit. That just means the first couple of years of benefits will be a little bit lower to start, but will increase over time. There is a chance you'll have to apply for that annually. We do have some excess lines carriers here at CAFL that do disability. We do typically need to reapply annually with them for benefits. Exclusions. So when we're talking about those impaired risks, those pre-existing conditions, you might find that there is an exclusion in disability or in the quotes where they it won't affect the premium, but they'll exclude certain conditions or parts of the body. So there might be a spinal exclusion. We see a lot where the mental health exclusion is on, or that there is a different kind of benefit limit to that. They see that it's frequent to the occupation. You might find that your insured might not even have a pre-existing condition, but it's something that's very common to their occupation. So the carrier will automatically put an exclusion on. So those are important pieces to look at to know if this happens, there isn't coverage in place. Tobacco use. Yes, we ask about tobacco use all the time. It does affect premium, even here in disability. And pregnancy. So I remember thinking when I, got my first job and they were saying, oh, we offer disability and I was pregnant, I'm going to get a disability policy to cover me while I'm out on maternity leave. It's not covered under disability. So it's just important to know that. There is other coverages that are exclusive to business owners that we do offer. Business overhead expense that covers the day-to-day expenses to run a business. So things like payroll, rent, utilities, things like that can all be covered. It does not, however, cover the owner's salary. So the benefits are taxable. The premiums are tax deductible as a business expense, but it is a way to make sure, especially for those small business owners, that their business is still able to run if for some reason they are unable to still function in the business. Loan protection is pretty self-explanatory. It covers any business loan payments for the life of the loan while they're out disabled. And disability buyout. So this is a big one that when you're talking to folks about business continuation or succession planning, it protects that business owners or that partner's portion of the business if they become disabled. It makes sure that it buys them out appropriately. Again, premiums are paid with after-tax dollars, making the benefits tax-free. So those are just a few things to keep in mind about the business side of individual disability. And then obviously the business overhead is more business related. I ran through that because we didn't have any questions. I like zipped right through it. Is there any questions on just the basics? I didn't get into a ton of riders because we are going to go over that. We're also going to go through some case studies to walk us through what does this look like? How does this work? When is disability like a really good thing we want to put in front of people? When do we have to have these conversations? I don't know if everybody that's on today was able to be in last week's meeting. As I mentioned a couple of times, if you didn't, definitely go on. It was kind of like a forum setting with two different carriers that are in different ends of the spectrum with individual disability that both gave great insight into how the disability field works for them. Did I go too fast? And again, this is the base information. This is not going through each and every carrier. Just to be transparent, CAFL has a lot of disability carriers, so there's a lot of different carriers you may get coverage through. We do read through those different coverages with you so that you're fully aware of what the differences might be, let's say between a Mutual of Omaha, a Principal, a Mass Mutual policy. We also offer a Meritas and a Surety, and then we have IDU. We have access to Standard and Guardian as well. So we're up to 8 carriers that we can run quotes with for disability coverage. Okay, I guess we're going to keep it short and sweet today. I can stop sharing my screen. If there's no questions, I'll just let everybody go. If you think of anything, please feel free to reach out to myself or anybody on your CAFL team. Thank you so much for hopping on today. I hope you have a great day.